Hi everyone, welcome back to the Web3 channel. My name is Zach. In this video, we're looking at, of course, Wells Fargo's Investment Institute special report on understanding cryptocurrency. To be very clear, nothing on this channel is ever to be considered financial advice. Always do your own research, but of course, it is important when we look at firms like Wells Fargo as to what they're saying. Of course, being such an institutional investment firm, let's go through what's happening here. Global investment strategy team: cryptocurrencies too early or too late? Key takeaways are the following. Cryptocurrencies are growing rapidly off a low base. Cryptocurrencies appear to be a near hyper adoption phase similar to that of the internet during the mid to late 90s. What it may mean for investors: we believe that cryptocurrencies are viable investments today, even though they may in the early stages of their investment evolution. We recommend professionally managed private investments for now, as the investment landscape is still maturing. Envy and arrogance are the two opposite sides of the same black crystal. Theodore Roosevelt. Over the past few months, we have written about cryptocurrencies and the unique technologies that underpin them. Today's publication is not about the technology, but a common point of confusion regarding the future of cryptocurrencies as an investment. That confusion is some investors think that it is too early to invest, while others think it may be too late. Our conviction is that cryptocurrencies are viable investments today, but there is still early in the cryptocurrency investment evolution, so we will explain. The too late to invest argument. Let's go over that first. Cryptocurrencies turning in some of the best performance over the past decade versus other major asset classes have a few new investors fearing that it may be too late. Bitcoin's price, as an example, has compounded at a 216% annual price rate since its first record transaction in 2010. By comparison, the total revenue of the S&P 500 over the same period has compounded annually at 16%. Such crypto gains have led to increased media attention and enviable stories of newfound wealth. A select few individuals holding since the earliest of days even became billionaires. 12 of the 2,755 individuals on the Forbes 2021 World's Billionaire list emerged from the world of crypto. So let's have a look at the Bitcoin price history. We understand that the too late to invest argument, but do not subscribe to what you believe that focusing too much on peak performance or past performance, especially with cryptocurrencies, can be misleading to new investors. First performance numbers are skewed because most cryptocurrencies evolved from virtually zero. The earliest years were highly speculative, and it was common to see individual cryptocurrencies launched at prices less than $1. Using Bitcoin as an example, again, its real first world transaction did not occur until May 2010, 16 months after its creation, and it valued one Bitcoin at roughly 0.004 cents. Bitcoin did not cross $1 until February of 2011. Second, cryptocurrencies are still at a very relatively young investment space. The vast majority are in fact less than 5 years old. Even the oldest cryptocurrencies have much maturing to do. For example, Bitcoin is the oldest and arguably one of the least volatile cryptocurrencies, but is still roughly 4 times more volatile than gold. Chart 2, of course, we can see here the volatility of gold, stocks, Bitcoin, and the US dollar. Last, cryptocurrencies are a different kind of investment, which has made them hard to understand and invest in. A big part of this stems from the complexity of the technology. Another reason is that cryptocurrencies originate outside the traditional financial system, which has made it hard to attract investment flows and research coverage. In the traditional financial system, companies spread their early development years in the hands of private investors, with the ultimate aim of attracting public investors too. If successful, the company often receives broad research coverage and access to a large pool of investors. Cryptocurrencies have not followed this path, as they launch from personal computers with limited management structure, if any. Why we believe it is early but not too early, however, we see cryptocurrencies in the early but not too early investment stage, which is why we have emphasized investor education. And I want to make very clear again, because it's been a few minutes since I said it, that this is not financial advice on the Web3 channel. We're simply going over what Wells Fargo is saying. The first The thrust of our view comes from global cryptocurrency adoption rates, which have quickly accelerated from a low base. Cryptocurrencies have been following an adoption pattern similar to other new advanced technologies, such as the internet. For the remainder of this piece, we will discuss how advanced technologies have typically been adopted and why we believe that cryptocurrencies may be near an adoption inflection point similar to the internet in the mid to late 1990s. Early tech adoption. It often takes many years for consumers to widely adopt new advanced technologies. Chart 3 highlights the adoption path of select technologies new for their time by US households. Rising lines indicate a growing percentage of US households using these technologies. Adoption typically started slowly, hit an inflection point, and then sleepily accelerated. It is important to note that in some cases, decades passed between the actual inventions and surging adoption rates. As an example, the internet was invented in 83, yet by 95, only 14% of what we are seeing today only 14%, of Americans and less than 1% of the world were using it. Interestingly, these adoption percentages are similar to what we are seeing today with cryptocurrencies. 13% of Americans purchased or traded cryptocurrencies in the past 12 months. 13% of Americans purchased or traded cryptocurrencies. Sorry, it's really hard for me to see what I'm looking at here with the screen I have. According to a recent survey by the University of Chicago, and roughly 3% of the world's uses cryptocurrencies, according to Crypto.com. In the early adoption years, user experiences with new technologies have often been clunky and frustrating as the ecosystem and infrastructure slowly matured. In the case of the internet, many readers may remember the days before the first web browser in 93, when accessing the internet required typing at a prompt on a green screen. Talk about clunky. Also common to the early adoption years is that when the first use cases emerged, consumers still needed time to figure out what the technology is, what it can do, and how it can benefit them. Conversations through 2021 revealed to us that many investors and consumers new to the space believe that crypto remains in this early adoption stage as they find the technology daunting and use cases unclear. Looking at technology S-curves, our view cryptocurrency adoption today looks similar to the 1990s. While the technology behind crypto is complex and use cases can be hard to visualize for those new to the space, data shows that the world is beginning to embrace their technology, and quickly. According to Crypto.com, the number of global cryptocurrency users reached 221 million in June 2021, or just under 3% of the world's population. Most impressively, it took only 4 months to double the cryptocurrency population from 100 million to 200 million. Cryptocurrency adoption rates look to be following the path of the earlier advanced technologies, particularly the internet. If this trend continues, cryptocurrencies could soon exit the early adoption phase and enter an inflection point of hyper adoption similar to other technologies seen in chart 3. We seem to be going over a similar point quite frequently here, so I'm going to move on from this. Another important consideration is that internet adoption, once it hits inflection point in the mid to late 1990s, rose at a faster rate than the other. Again, we're going over the same thing of, yes, it's like the internet. Okay, hopefully they maybe go into something else here. Be patient. There is no need to rush, as most of the opportunities lies before us, not behind us. The graphic on the following page highlights that the entire market capitalization of cryptocurrencies is still less than that of the technology company Apple. Be prudent. Adoption rates are rising, but investment options are a bit behind and still maturing. As a refresher, there are generally 3 ways to gain exposure today. Buying cryptocurrencies directly from an exchange is the first one. The second one is mutual funds, exchange ETFs, and grantor trusts. Number 3 is private placements. Option 1, buying directly from an exchange, we do not advise. The technology is complex and the speculative investment risks are high. Option 2 is not advised either, as current US mutual funds and ETF options are backed by futures, not the digital assets themselves, and grantor trusts are often dogged by high fees and volatile net asset values. We are hopeful that regulators may soon approve mutual funds and ETFs backed by the digital assets themselves, maybe as soon as 2022. Until that day comes, though, we prefer that qualified investors turn to option 3, professional management through a private placement. To be very clear, when it comes to the ETF funds, like I say, as soon as 2022, we do cover everything happening on this channel when it comes to ETFs and the progression when it comes to, of course, the US legislation. Be careful, though. Some investors have expressed frustrations with such limited investment options. We empathize and would prefer to have more high-quality options to offer. This is unfortunately not the investment product state we see today. For those unwilling to wait for better investment products and feel compelled to try option one, we say be careful and keep the 1990s in perspective. Early stage investing is often fraught with violent boom and bust cycles, as many a .com company and investor can attest from 20 years ago. More than 16,000 cryptocurrencies exist today, and if its history is any guide, many will fall or at least fail to scale. Cryptocurrencies already succumbed to one shakeout event in 2017 when more than 1,700, about 40% of all cryptocurrencies at the time, went bust. We believe odds are high that cryptocurrencies will see future shakeout events. Lastly, picking long-term technology winners is no walk in the park. Investors must routinely evaluate the current winners and losers against the ever-rising set of yet-to-be-created companies. Again, this is doing your own research, right? We will use 1996 to 1997 as an example. Again, the most visited websites of that time, no matter their line of business, did not stay relevant much beyond the year of 2000. Anyone wants to guess the most trafficked website in 96? Hint, you've got Mail. An interesting twist of the story, though, is that the large company in S&P 500 by market capitalization today was a beaten down hardware company that was on the brink of bankruptcy in 1997. As a summary, for today's investor trying to figure out if we are early or late to crypto investing, looking at technology investing in the mid to late 90s seems reasonable. At that time, the internet hit a hyper adoption phase and never looked back. Crypto appears to be at a similar stage today. Cryptocurrency investment options today, however, are still maturing, and we advise patience. For now, we suggest the consideration of only professional managed private placements. We do not recommend any of the other current investment options, such as mutual funds, ETFs, etc. And with that being said, let's have a quick look at the risk considerations. Each asset class has its own risk and return characteristics. And to be honest with you, I think everything that you've read here, I didn't think we would get through the entire thing, but it turns out we did. Everything you've seen here, I feel like they've repeated themselves quite a lot in this. But either way, that is, of course, the idea here. This is what Wells Fargo is putting down when it comes to cryptocurrencies as of February of 2022. This is the Web3 channel covering everything happening in the Web3 space, some crypto, NFT, metaverse news. Have a great day, everyone. I'll see you in the next Web3 video.